I don't like negative rates. Europe has them, Japan has them, the U.S. doesn't have them. My question to you is the U.S. central bank efficiently using the amount of eases it has left if it has no intention to go below the zero bound, in your opinion?
Well, as regards, Rick, it's a pleasure to be with you. As regards the negative rates, of course, everybody knows that if we had negative rates in Europe, it is because we had not only the crisis which came out of the Lehman Brothers bankruptcy, but also our special sovereign risk crisis. So we had a very, very peculiar environment of deflation or deflationary pressure to cope with. That's the reason why we were, and we still are, in negative rates. I would not suggest for the United States necessarily to embark on that route, and I would suggest to utilize maybe other means, other tools than embarking on the negative rates, which have their own drawbacks, even if they are fully justified in the case of Europe, it seems to me.
Mr. Trichet, do you think it is unreasonable for any central bank to hold rates at a level that the rest of the yield curve seems to be sliding past, just to hold the pressure points to keep from going close to the zero bounds? There may be curve distortions, but is that a big or small price to pay for avoiding the zero bound?
Again, it seems to me that, of course, the central banks have to do what is appropriate in the circumstances. At the present level, frankly speaking, I am not sure that we have the equivalent of what we had with the Lehman Brothers bankruptcy and the absolute drama of immediate and grave threat of depression, not recession, but depression. So it was very special. And in those circumstances, again, the present one, I mean, I am not sure that we should go in the U.S. below zero. So it would call, of course, for having some view on what should be or could be done right now. I am not sure that it would be very good to utilize right now all the cartridges that the central bank has. And from that standpoint, I am not encouraged at all by the successive call from the president, from the chief of the executive, to call for a decrease of rates and be unhappy with the decrease of rates when they arrive. I mean, it does not facilitate certainly the task of the Fed. And I guess that the Fed could say more or less like the Attorney General from time to time, you're not facilitating my life. And you're not facilitating my own authority, because what calls is the authority of the central bank, the authority of the Fed. The credibility and the independence is absolutely fundamental in these present circumstances.
Excellent. One final thought. We're going to stretch it out here. The dollar. I see many of my sources think G7 does not like the strong dollar, and that part of their message of not addressing more liquidity was really a notion that if the U.S. coordinated lower, the dollar would weaken, easing some of the pressures of the emerging markets and the high demand for dollars to satisfy liabilities. Do you think the strong dollar, even at weaker levels, is going to be an ongoing problem for emerging markets and much of the globe?
Well, first of all, I'm not sure that the dollar is that strong at the moment I'm speaking. Second, let me say that you mentioned the G7. I am struck by the fact that we have a global crisis. Coronavirus is a global thing. It is impacting, of course, enormously emerging economies, including Asian emerging economy. It started there. So I am a little bit annoyed that we don't hear the G20 at all. We don't hear the coordination not only between the major advanced economies, which is the G7, but all, I would say, systemic economies in the world, including the emerging economies, because to tackle with the coronavirus, you need a global strategy, not only a strategy restricted to the advanced economy and concentrating on central bank and on markets. I mean, it's a global issue, and we will
Trichet,
get out only if we treat the global issue.
We're going to have to leave it there, sir. I thank you for your time.